I'm John Jenkinson, and a quick reminder that Monday the markets are going to be closed, but we'll have a full trade today, and then we'll resume regular trade on Tuesday. And that Monday off is going to be, it's because it's a holiday, and that will do the same thing next week that we did this week. It'll push all of the government reports back 24 hours. So things like the ethanol report, the export sales, export inspections, all of that will be delayed by 24 hours next week again. Just keep that in mind while we're moving into the brand new year of 2023. Let's go to the grains here. We started out higher. We moved a little bit lower. We weakened some of these. We came back with wheat. Right now, corn, well, it's on the lower side by 0.75 cents on the March, 3 1/4 cents lower on September. So erasing some of those gains that we saw earlier. Soybeans, though, still hanging on to some gains. 11 1/4 cents higher for January. March is up 8, but that far out August is up only 5 cents. But we are well off of the highs, still above the lows, and that has been, as we mentioned, quite a wide trading range. We've talked a lot today about soybean meal. Right now, the January is up $15.50 a ton at $479.50. The March is up $13.70. And we've also talked about soybean oil. The soy complex has really garnered the attention of a lot of traders. January soybean oil down $2.85 at $63.55 a hundredweight, and March is down $2.51. These markets, by the way, are provided by Bar Chart. Right now, March wheat in Chicago up 17.5 cents at $791.5. Kansas City March wheat up 19 at $885.5. Minneapolis wheat for March up 17.5 at $931.5. And let's go with March cotton. It is up 119 at 83.83, building a fire under this cotton market. Todd Horwitz joins us for the second time today. And Todd, you and I have been watching these markets throughout today's activity. A little bit of back and forth, but I want to get you started down the road of talking about demand for the grains going into 2023. And I want you to expand on that for our audience who may have missed that just a little bit, because you had some interesting things to say.
First of all, can we put the government reports off for like 24 days instead of 24 hours? I mean, they're never that accurate anyways. Look, we have issues, John. You know, if we go back, let's say 12 months, we already know that last year, Brazil, Argentina, and Australia had a bad crop. We know that our crops are good, but demand is up, population is up, and we're losing 30% of the crop through the Russia and Ukraine battle, right? Not only are we losing crop, we're losing some of the components that help us fertilize these crops. So at the end of the day, these demands are going higher, and even though maybe you're not paying attention, you're not noticing, but prices are going up at the store. Prices have gone up significantly everywhere except at the wholesale end from the producer. But I think that that's got to change as well, because when we go into this new year and we have our farmers and producers putting together their game plans for the new year, you know, some may decide, you know, my input costs are way too high. I'm not going to plant this year because I can't afford to take the chance. Because remember, farming is a risky business because you have to depend on a lot of factors that go along to it.
All right, we'll come back in a moment. We'll talk about the demand side for the livestock straight ahead with Todd Horwitz right after this. Let's continue on now with the futures in the livestock, and we'll stop over here at the live cattle market first. We're down 67 cents on the February, 158.17. April down 50 at 161.95. June live cattle are down 30 at 157.85. In the feeder cattle complex, it's March down 97 at 185.80. April feeders down 85. Going back up here to that January, we're at 183.35. It's down 45. A lot of 180s and low 190s till you get out to that August contract in the feeder cattle market. February hogs down 87 cents at 87.80 hundredweight. April down 25 at 95.45. But May is up 2 at 101. So Todd, I want to get your take on demand for protein here in the new year also, because we'd touched on this last time you and I talked. The economy is going to play into that some.
Well, John, I think that the protein complex itself is probably pretty much stable and not going to go either way up or way down. I think it'll revolve around what's going on with crude oil. It'll revolve around what's going on with the inflation curve, and the cost, because certainly now we're in a different arena. There are other sources of protein if you needed to go to them, right? You can start with, beef, hogs, and then poultry, and then even there's other proteins as well versus what happens in the grain markets. So I think that they've kind of reached their pinnacle, unless there's some crisis or emergency that would push these things higher. But I don't think they're going down. I just think we're really in a very range-bound market that will really play off of what crude oil does first, because that is the first thing that we all look at if we're going out to buy for the family. Can I afford to buy a steak, or do I have to buy pork, or am I going to have to buy poultry?
You bring up a good point about the poultry, because we've got kind of a tight supply right now of poultry. You got to wonder if that's going to shift some of this demand. Where does China play into all of this? Because, they shut things down for COVID again, and now they're trying to open things back up, or so we hear. That's a big player in all this ahead, doesn't it?
Well, they're a big player and they're not a big player. I mean, we always resort to China. I've been hearing about China since 1980 when I started trading. And I think when you look at the bigger picture, China owns one of the biggest hog places in the world, Smithfield, which is an American company. They still eat when there's COVID. They still have issues when there's COVID. So I don't think the demand curve is going to change much whether they're open or not. And they're using this, to me, as more of a political weapon, but that's a story for another day.
All right. Well, and we're also going to have to keep a sharp eye on interest rates and what goes on here in the United States with the economy. Todd, it's always great to visit with you. I wish you and your family all the best in the new year, and we're all looking forward to 2023. So thank you again.
Thanks, John. Happy New Year to all the RFD family. I appreciate you all.
Thank you, and we appreciate you as well. Todd Horowitz, Bubba Trading. Be sure and get a hold of him. He can answer all your trading questions. Ms. Alexander, back to you, ma'am.